If you understand the algorithm behind the markets, these are the trades you will take every day in and out. And today I am currently 50% up in my account because I exactly know why this move happened, because I know how the algorithm is delivering the price in the correct direction. So there are many different types of liquidities, not the inducement liquidity and the structural liquidity. There are many types of different types of liquidities, including news liquidities. If you understand and master all of the liquidities, you can exactly know how the price is moving and where it was moving from and towards where it was moving. So watch the video till the end and you will exactly know how I am trading from the liquidity point to the liquidity point. No other video in the YouTube will help you to take these types of entries. I find no other YouTuber than me teaching this stuff. This is the only video that can change your life completely. If you can't watch this 50-minute video till the end, nobody can help you. You will still be broke in your trading journey. If you watch this video till the end, you can understand why this move happened, why this small move happened, why this liquidity is happening, why the stop hunts are happening in the marketplace, why the price is only moving after the stop hunts. So watch this video till the end and change your life. So before understanding the algorithm behind the markets, you should understand the differences between how the normal smart money people will view the structure of the market and how the top 1% people who use the algo structure and trade the markets in and out of every move. So normal SMC people will view the market from the break of the structures, mitigations, break of the structures, mitigations, break of the structures, mitigations. It is a complete false education that was pumping out in the YouTube, Instagram, everywhere. Even many brokers and the prop firms are sharing this education. Because why? If the prop firm shares this type of education, just only because they don't want you to make money, they want you to always lose money. This structure is a lie. Structure is completely illusion. Have you ever seen the market moves in this direction? It makes me completely angry because this is completely a lie. Matrix is lying to you in front of your eyes. Even if you are trading from 2 years or 4 years using this simple structure concept, you will never be profitable just because it is a lie. But if you understand the mechanics of the market and if you practice to see the hidden truths of the market's behavior, which are not seen anywhere in the YouTube or Instagram or nothing, this type of stuff is very hidden. Inducement and SLQ, you had that terms many times in the Instagram. They just do it for the marketing. They don't know what they are. They don't know how to pick the correct liquidity and correct inducement. And many SMC people will trade that. This is completely a lie. Never market will work like this. So how the smart money people will understand the direction is they will understand the direction by the break of the structures. If it break the structure, they will buy. It's completely bullshit. Why it should go up if it broke here? It's nonsense. So when coming to the left, this is how the top 0.1% professional Gs will trade the markets like me. And if you watch the video till the end, you will also become a G. If you put in the work, you should put lot of work if you don't join my mentorship. So in this video, I will explain everything. So if you put in the work, thousands of hours, you can become like me and trade the markets in and out. So this is a complete blessing to you guys. So the first simple thing, there is no movement in the market without liquidity. This is the first lie you should remember. There's no movement without liquidity. If the banks want to move the price towards the upwards, they don't and can't move the price. They can't move the price because they need the opposite type of orders in order to execute the price. If you want to see, if the banks want to move the price from this point to, let's say, from this point to this point, if the banks want to move the price, they want to induce the liquidity, right? So how they will get the liquidity? So we know, right? Many people will buy here, and many people stop losses will be here. So what are the stop losses? Stop losses is the money. In order to move the price, they need the opposite side of the order. So if the banks wanna buy, they can't buy without sellers, right? They need, of course, sellers. They need sellers in order to get their buy orders executed. So where are their sell orders? So the all sell orders will be at the retailer's liquidity. So here it is the liquidity of the retail people. So the beneath the order block there is a ton millions of dollars of liquidity will be there. This is how I read the banks, what the banks are doing in the current day, and I follow them. I will follow that day and move with them. So after this liquidity is taken out, they will show some patterns in the second time frame. This is the very secret stuff. Nobody is talking. In the second time frame, they will induce again fake break of the structure towards the upwards inducement, and then they will go in the real direction if they want to turn the price. This is the simple mechanics of the movement of the price. If there is no liquidity, there is no movement. Liquidity is the fuel for the price. This is the first basic important concept of the oligo structure. No liquidity, no trade. That's it. Just remember that. So you understood what is the liquidity, and also you understood how the normal SMC people get wrecked in and out in the marketplace because they don't understand the liquidity. What they will think when the market did this, when the market did the liquidity grab, they will think the market structure has shifted, and now they will sell the market. They got wrecked 2 times. This is how the smart money people will get wrecked in and out in and out. If you are learning the smart money concepts, please stop learning and learn the algo stuff, because this is where the real moves. Many people will tell SMC is the best strategy. SMC is the best strategy. They don't know. They are the best marketers. It's not the best strategy. I'm telling, right? If you do hard work using this stuff, you will become a millionaire by 1 year. I promise you. Because you will eventually follow the banks. Simply. So, types of liquidity. Now, I wanna talk about the types of liquidity. First thing, inducement liquidity. Second thing, structural liquidity. Third thing, transactional liquidity. Fourth thing, fundamental liquidity. This fourth thing, nobody talks about the fourth thing. These 1 to 3 are available in the internet, but this fourth fundamental liquidity, nobody is talking. I will explain clear cut in this video. So everybody think if you understand the chart patterns, we can become good at trading. But apart from the chart patterns, you should also consider one data, which is fundamental news data. I will exactly explain the topic in the fourth fundamental liquidity session. So until I will explain these topics. So what is the inducement liquidity? If the market is moving towards upwards, you should understand what the smart money people will do. They will buy here, right? They will buy here. So in order to make the price towards this point, if the algorithm want to deliver the price towards this point, let's say for example, it needs liquidity. It can't move the price like this. It needs liquidity. So it will, and it should do a stop hunt. This is the first sign that is indicating the market want to reverse. So in the second time frame, I want to see a specific pattern here, and I will buy the market until this liquidity point. This is the simple thing of the inducement liquidity. This is what I mean by the inducement liquidity. Simple thing. If the market is going in the one direction, and you should identify the where the smart money sheeps are entering the market, and also identify the stop losses. By identifying the stop losses, you should just draw a vertical line. You just draw a horizontal line and place a order here. Target the nearest liquidity. It can be your first target, and the second target can be your high time frame liquidity. This is the simple stuff. Even when it's going into the downtrend, let's say this is the pattern. Let's use the red for the downtrend. Simple. How can you know this is the downtrend? Just because this is where the smart money people will sell. Because this is the break of the structure. Break of the structure. Now the smart money people will sell when we are in the sells here. After all they are taken out, after every retail trader and smart money trader and IC traders all are taken out, then we will enter the market. And also remember, if a strategy is used by many of the traders, it will become the liquidity. The strategy I am showing is used by very top traders who are not in the online. They will just trade for the living and enjoy their life. I am the only one guy showing this stuff. Always the liquidities will be changed. You should be updated by the current market trends. If you join my mentorship, I will always show what liquidity cycles the market is currently. It needs a lot of practice, guys. It needs a lot of practice. In this video, I will show you exactly what you should focus on. So this is the first basic type of liquidity, inducement liquidity. So second thing, what we should cover is the structural liquidity. So what is the structural liquidity? So let's say if the market is moving like this, so let's say we are in this phase and market is moving in the higher highs and higher lows pattern. This is the structural liquidity. The low that was inducing a clear order block is known as the structural liquidity, because many people will look in this zone. Many smart money people will look in this zone and trade the markets. But what will happen? Their stop losses will be here. I told you the liquidity is only the fuel for the price. So at this low, there is millions of dollars of smart money people money will be there, and the banks will use that money to execute their buy orders. To execute their buy orders, they need the sell orders, right? So there will be $1,000,000 of buying positions here, and automatically these sell orders will turn into the buy orders automatically, and they will deliver the price towards the upwards. This is how the market works every time. Stop funds. It depends on the pair. If you focus on the GU, the stop funds will be very more. Stop fund mitigation and the market will go. This is the pattern. Structural liquidity is here, and this is the inducement liquidity. If there is no low before the up move, then it will be 100% inducement liquidity. So if the market is showing this type of pattern, then there are two chances. The market can induce this liquidity and mitigate and go up, or the market can also induce this inducement liquidity and then reverse. There are two types of scenario if this is here. Always the higher probability scenario is this inducement liquidity. Always inducement liquidity is the very higher probable set of scenario. So third thing, transactional liquidity. Many people think this is how the market moves, but this is completely false. You should think outside the box. You should ask yourself why the market is reversing after a high is taken out. Because after a high is taken out, you should ask yourself, right, for every high and low there is a liquidity. For every high, the retail people will have buy stops here. Right? The retail people have buy stops. So if the market is moved in a single direction, all the buy stops will be in a huge profit. This is the simple logic. That's why the market will turn around and then take their liquidity, take their stop losses, take the retail people stop losses here, and it will go up in the direction. This is the basic think why the market reverse after a high is taken out. This is the transactional liquidity. Transactional liquidity are the stops liquidity. Retail people stops liquidity are nothing but the transactional liquidities. That's why always for the transactional liquidities we don't target these liquidities. We always target the safe targets. Safe targets means we can target at least 50% of the trend, or we can target the second target will be structural liquidity if it is there, and the third final target will be inducement liquidity. This is how we exactly following the algorithm by aligning the probabilities. The first highest probability is inducement liquidity. The second highest probability is structural liquidity, and the third highest probability liquidities is transactional liquidities. And sometimes these transactional liquidities are the higher time frame inducement liquidities. It is a very important thing if you backtest. So what is the fundamental liquidities now? So fundamental liquidities means if any news came like CPI, PPI, FOMC, NFP, the market will stop hunt one liquidity. So let's say this is the trend before the news. Let's say this is the trend before the news. So here is the news. Exactly at 550, let's say there is a FOMC. Always, if you see 9 times out of 10, the market will take the liquidity and then move in the real direction. This is what I mean the news. This is the very important thing, because the news. So let's say if the news came bearish for the dollar and the news is not yet released, but we can know if you are a gem in the technical analysis, 80% of the time you can know where the price is moving. If the sell side liquidity is taken out, you can have buy positions. If the buy side liquidity is taken out, you can have sell positions, simply because of the understanding the liquidity. So if the market is going downwards and the buy side liquidity is taken out, you can understand it's because the market maker doesn't have the sufficient liquidity to fund this move. To fund this move, they need buy orders in order to execute the sell orders, right? So they will take the buyer's liquidity and then it will deliver the price. That's why this massive sell-offs happen. After taking the simple liquidities, you will see a small spike at that liquidity and it will be aggressive push, just because they will induce a lot of liquidity, similar to the buy pattern. I will explain the buy pattern also here. Don't confuse yourself. Let's say here is the news take out the liquidity, huge spike towards upwards. This is the general market schematics. These are the different types of liquidity. Even with the 1 minute time frame to the daily time frame and the weekly time frame, these are the same patterns that happens over and again in the marketplace. If this pattern is happening in the monthly time frame, you will see some weeks bullishness, because the monthly liquidity is the very powerful liquidity, and all the low time frames will automatically align into the liquidity. So it is always necessary to understand what the high time frame is doing, and then you can change into the low time frame liquidities and then trade. Without understanding the high time frame, you can't trade anything, because the high time frame always have the superior power. So now let's coming into the back test. I will explain all the trades now how I took in the 1 minute ping pong. This trading I call it as the ping pong because it's very easy. I can exactly see how the market is moving and where it was moving. For example, I can take this trade. I can take this simple trade, but this trade is in Asia. I don't trade in Asia, but if I trade in Asia, I can simply trade. This is the early buyer's liquidity. Liquidity got taken out. Pattern. Simple trade. I can target this liquidity, and the second target I can target this. Simple things, but you should be very disciplined in trading. So first thing first, you should understand where the market is going. The simple thing you should do is you should understand where the market is going. When I coming into the charts here, I'm seeing the market is moving like this, like this, like this, like this. It is in uptrend. It is an uptrend. Simple thing what you can know is it is an uptrend. What I explained you about the liquidities. What I explained you about the liquidities. This is the inducement liquidity. You should understand where the smart money sheeps and pigs are entering the trades. This is where, and I don't mean any wrong to the smart money people because they are beating me. They are making me millions of money. I am taking their money. See here, this is where smart money people will think. They will think that there is a imbalance. So ICT told if imbalance is there, it is very high proper. It's bullshit, guys. Liquidity is the only fuel. I waited for the liquidity grab. I'm waiting for the liquidity grab to be taken out. And then the liquidity grab is happened. I exactly placed the position with 2 pip stop loss. 2 pip stop loss. I am in buys and target the safe target. First target will be inducement liquidity and the structural liquidity. This is the structural inducement, which I call it in the second pattern. This is the structural inducement. This is the first target. This is my second target, and my final target will be high time frame liquidity. So it hit my first target, as you see, and the market reversed. And two scenarios can happen. This can be the real break of the structure, and this can be the structural liquidity. So that's why I took a sell here. Stop loss safe at this exactly high, and target next liquidity. That's simple. This is the trade. Buy because of the inducement liquidity. This sell because of the structural liquidity. So again, same thing. You understand how the market oscillation is moving. What's the current human nature of these smart money people? Smart money people again think, oh no, the market trend has shifted the bearishness. So I should sell the market. If you see, the current market trend is bearish, right? Bearish, bearish. So what the people will do is they will sell the market here. They will think this is the order block for sales and they will sell here. But I don't sell here. I sell after the liquidity. All the liquidity is taken out, right? Because that is the structural liquidity. After the liquidity is taken out, this is the mitigation, just a confluence. I don't look at the order blocks, I just look at the liquidities, and I sold here and I targeted. So this is my first target. Inducement liquidity got hit. This is the very important topic. Here the structural liquidity SLQ is not there. This is not the SLQ. SLQ should be clear like this. This is not a SLQ. In this scenario, there is only transactional liquidity, transaction inducement, what you can call. That's why I targeted this liquidity simply. And also, there is a specific price pattern before any reversals. Before any reversals in the price action, there is a specific pattern in the price. So let's say if the market wanna reverse at this order block, there is a specific price action. The price will give you a fake break of the structure, induce the liquidity, and fund the point of interest. The point of interest is not enough for the reversals. It should itself fund the price. Fake break of the structure, many millions of people will sell here, stop losses here, and then after the stop losses will taken, then it will move in the real direction. This is how it moves. And also second type is there are two types of price behaviors before coming into the moves. So second thing is, let me draw. This is the point of interest and this is the price. Let's say the price will build up the orders. It will build up a lot of order liquidity. Now the retail people will think after a break of the structure, they will think the market will go up. This is the complete false. I think now it's making sense to you after this 30 minutes of video. I think half of your brain will be washed out because of this type of quality content. Because if you go to the charts after watching this 1 hour video, then your minds will be amazed. Oh shit, this much of years I'm wasting this stuff. This is the final golden nugget. You will definitely feel that, and you should comment that. If you feel so, you should comment in the video and like the video. And let's open the many people eyes in the false trading communities, like many. This is the real stuff. Because it needs liquidity. You use common sense. Without liquidity, there's nothing. Without liquidity, there's nothing. And here, if you focus, I told you, right? Before reversals, always market wanna give a fake break of the structure. This is the price behavior that was noted. Inducement, mitigation of a small order block, and I buy it here and target. My first target is this liquidity. This is the, if you go to the 5 minutes, this is your structural liquidity. So that's why I sold here and I targeted here at the nearest liquidity, because I know the market wanna continue upwards. That's why my target is safe. And again I bought here because there is a EPA. EPA means inefficient price action. Always the market seeks efficient price action. If the market is inefficient, always the market wanna be efficient. If you see, this level is not mitigated. If you go to the high time frame, this level is not mitigated. So that's why, to make the price efficient, the market came again and move into the real direction. That's why I bought. I don't want to explain the inefficient price action and efficient price action. I want to keep it for my mentorship student, because this is the final sauce. If I explain here, everybody can trade like me. That's why I only open it for my mentorship students. If you want to join my mentorship, only 3 spots are there for the December bootcamp. And also, you should have 2 years of experience in the day trading. If you don't have experience, sorry, you won't understand any of my stuff. If you have experience only, you can understand. So if you are correct fit to me, then message me in the WhatsApp. If I am free, I will think. So coming back into the video, I told you, right, before every move, before the reversals, the market tend to form a setup of the build-up. This is the exact build-up I showed you, right? This is the exact build-up. This is the stuff. The market showed the exact build-up, and this is the real POS. This is the SLQ, structural liquidity. SLQ got taken out. This is the safest entry I have ever taken, because lot of confluences. The market behavior is there, price delivery is there, break of the structure is there. This is the real break of the structures. Nobody knows what's the real break of the structures. And the mitigation of the order block is there after the SLQ. So many confluences. That's why this is my target. Bread and butter stuff. Why I buys here? Because simple. If you think, this is the liquidity, right? This is the liquidity, and this is the efficient price action again. This is the APA zone, efficient price action zone. That's why many of you who knows a little nuggets about the liquidity, after the liquidity is taken, they will buy here. You should not do that. You should not do that. There is a specific pattern and the mitigation timings you should have. There is a specific timing here. If you see, this timing is 1846. If you see, this is exactly 8 minutes before the new 30-minute cycle opening. There is a lot of stuff, guys. This is, I am just showing you the liquidity stuff. There is a lot of stuff going into the 90-minute cycle, 60-minute cycle. Just wait, lot of videos will come this one. If I talk everything in the video, it will take a lot of hours. The video will take at least 1 day. I can continuously talk. I think the YouTube not allows the 1 day videos. So EPA, this is the efficient price action, because this zone is inefficient. Why? In this zone, the sellers got no chance to execute their order, so the market will give a chance for the sellers. That's why I took this buy, and my first target here at the order block, because I know high time frame wise the market is heavily bearish. That's why I sold again here at the mitigation of the order block. Liquidity got taken out, mitigation, order block. Again, if you see here, why I took the buy here? Again, simple stuff. Liquidity. When coming into this time, crores of smart money people will buy here. That's why this reaction came. Huge reaction. How much the pressure is, how much the pressure of the buying smart money people is. They bought here, and also the market gave the break of the structure. Lot of liquidity. To pump the liquidity, the market should give at least a bullish reaction until the inducement liquidity. So after the inducement liquidity, we know from the high time frame wise we are heavily bearish. And again, this is the smart money trap. Lot of smart money traps, guys. I still wonder why the smart money people are using that concept, even though if they are not profitable. This is the first lap liquidation. This is my concept. First lap liquidation, and this is the same concept I used in the first trade I show in the Asian session. First lap liquidation, second lap entry. Same thing here. First lap liquidation, second lap entry. I use the same concepts daily, guys. I use the same concepts daily. If you ever wonder why the market is moving up, there is nothing crazy to it, because liquidity got taken out. Liquidity got taken out, and the market is again forming the similar pattern, right? Similar pattern. This is I am showing the live stuff, guys. Similar pattern. This is for the buy, and for the sells, similar pattern. Sweep. Similar pattern. After the sweep, I will be in the buy, targeting this liquidity, because this is all the trend line liquidity. You should think like a chartist, guys. You should think what the retail people are doing, smart money people are doing, what the banks are doing, everything. Then only you can get profited from the marketplace. This is only the liquidity videos. There is lot of stuff that is about to come. So there are only 3 spots left for the mentorship. If you want to join, you can. I will check. I will ask you small questions to you to check whether you have experience or not. Then I can take you to the mentorship and change your lives completely. Once you join the mentorship, you will understand the real moves. You can understand why this small pullback happened. You will understand why this small pullback happened. If you see why the market is reversed from this, not from this here, because simple. Because I read how the candle shape is. This candle shape has lot of buying pressure. If you see the wick, I know it will hold because of the 50% of the wick is there. That's why if you see main threshold, this is the topic I taken from the ICT. I don't respect all ICT concepts because some of them are not important. If you see after the 50%, the market is showing the rejections. It indicates the ALGO is want to turn the price. That's why you can buy here, but I don't take these buys. I only take the buys at the liquidities. That's it, guys. In the mentorship students, I have made a separate core criteria, explain everything's main thresholds, liquidities, efficient transactions, liquidity cycles, daily cycles, weekly cycles, monthly cycles, 90-minute cycles, quarterly, lot of. Yeah, so guys, and also it comes with a high ticket price. It's not a low ticket price, of course, because I took lot of hard work to me, lot of hours. That's it, guys. On the next video, let's meet again with the new quarterly cycles and liquidity cycles, which is again the very important topic. Until then, peace, guys. Have a good week.